because I've learned a lot of this from Cathie's writings. If you are in a new asset class and you're in something that's this disruptive, that is scaling, well, you're going to have a volatility curve to that. Amazon, as an example, a $10,000 investment in its IPO May 15th, 1997, worth $21 million today, but you had to subject yourself to 8 periods of time where it was down at least 50%, in one case 85%. And yet if you held on and Amazon did reach its arc pursuant to Metcalfe's law in terms of its scalability, becoming a fully embraced retail network, you had to go through that volatility. Same with Facebook, same with Google. So we size this appropriately for our clients with this sort of walk away mentality, where if we had to mark our position to zero, we were still comfortable with the rest of our assets. And of course, if we're right, we have enough of it on where it'll have a big impact for our client portfolios.
Yeah, I agree with Anthony. We are long-term in our focus. Keep your eye on the prize. And I do think in the short term, what has happened here, one of the things that's happened is reminiscent of the beginning of 2017, when China shut down all of its exchanges and the Bitcoin's price collapsed. And anyone who bought on that enjoyed one of the most magnificent runs during 2017, because what we learned is, fine, China shuts down its exchanges and the activity moves to Japan, Korea, Thailand, almost seamlessly. And when people looked around and said, okay, nothing happened there, this just shifted. And we think the same will be true of mining, by the way, and therefore mining will be more transparent than it is in China right now. I think ESG is the second reason that it has gone down. Environmental, social governance, primarily environmental. How is Bitcoin mined? A lot of institutions are asking that question. And ESG has become a very important strategy, especially in Europe, increasingly in the United States. And this was one more risk that it was going to keep institutions from migrating into this new asset class. This is a new asset class. And from 10, 11 years worth of data, we can see the low correlation of returns compared to other assets. Institutional investors have to consider this because certainly their competitors are, as another form of diversification and opportunity. And I think this put that off for a moment, but I think that the spotlight on the environment is going to cause something really interesting to happen here. We just wrote a paper with Square about the ramifications of putting Bitcoin mining into a solar power wall merchant power ecosystem, so that it could absorb all the extra energy coming from the sun after the battery, the power pack is filled up. That would add a new dimension of economics to this ecosystem and would encourage homeowners and utilities to add more solar to their own ecosystems than otherwise would be the case. So it's actually going to accelerate the movement into renewables. I think that's what's going to bring institutions back. And I think Elon Musk highlighting, is this a risk that I have considered adequately as I put Bitcoin on my balance sheet, my firm's balance sheet? I think he's going to be a part of the solution. So we think what has happened here is actually going to turn into good news.
And I just want to add something, if you guys don't mind. You had $1 trillion+ taken out of the marketplace if you factor in all the altcoins, what happened to Bitcoin. And yet I want you to think about the power of decentralized finance. If that would have happened to the banking system, or if that would have happened in 2008, we would have been awash in a crisis, a stock market crisis. The Fed would have had to come in with the cardiac pumps and clamps and jammed hundreds of billions of dollars into the economy. And so So when you think about the shock of losing $1 trillion of value, and yet the system cleared itself beautifully. And so,
Mhm.
in a very weird way, there's an anti-fragility to what took place over the last 2 or 3 weeks.
Yeah.
Cathie, do you agree with that? I
Yeah,
just want.
absolutely. I was keeping very close contact with my friends in the DeFi space, particularly venture funds deeply involved in it, and monitoring. And it seemed to go pretty flawlessly. Of course, there are some bankruptcies out there, and businesses that are not going to exist. But this is the natural clearing process. If you want to take on that leverage, that's the kind of risk you're taking, and just know that. So I think each one of these corrections, certainly the coronavirus was a battle test, and now this one is a battle test. I think each one brings with it improvements in governance, but also proves out, as Anthony says, how robust this decentralized ecosystem is. But there's another side to this. So Ray Dalio earlier this week said he'd prefer to own Bitcoin than bonds. Now he's worried about a deflationary bust. And I think the truth actually is somewhere in between. He is worried about the counterparty risk that is going to occur because of a deflationary bust in the global ecosystem. So think about it. We're talking about a hedge against inflation and a hedge against deflation. That's pretty good. That is pretty darn good. I don't think I know of another asset, maybe gold, but no, I actually think this is the first rules-based monetary policy, global, stateless, and trustless. So I think we're on to a completely different animal here, and it's pretty exciting. Based on the research that Yassine El-Mandra has done, that institutions will become a very important part of this ecosystem. And if we use those two numbers, that range 2.5% to 6.5%, you go towards the upper end of that, say 5%, that alone would add $500,000 to Bitcoin's price, just as institutions try to get a foothold in. So we're extremely optimistic about Bitcoin, and I'm more optimistic now after this correction. In the equity market, you call 20% a bear market. I don't know what they call a bear market in crypto. So I feel, though, that as Anthony said, that we haven't even begun the institutional movement into the space. And so just that one use case gets us to that kind of price. Of course, the volatility will be with us. My compliance department would be very upset if I did not add that. It's not going to be straight up. It's not a super cycle without 50% corrections. And beware, from a leverage point of view, you can lose everything out there in crypto if you're a leveraged player. So buyer beware, be careful, but hang on for a beautiful ride.